No respite from Fed rate hikes this 12 months, chances rising of 450 bps in a row. Reuters poll Bengaluru. The U.S. Federal Reserve will hike its key hobby charge by means of 50 basis points in June and July, with rising chances of a similar pass in September, consistent with a ballot of economists who see no pause in rate rises until subsequent year. Faced with inflation strolling at simply under a 4-decade excessive and extra tightening in the labor market, the Fed is beneath stress to fast take its policy fee to the impartial degree that neither stimulates nor restricts and beyond. All 85 economists in a June 69 ballot expected a 50 basis point federal price range rate hike to 1.25 pages C 1.50% on Wednesday, after a similar pass final month. Another such hike become penciled in for July through all but a handful of survey individuals. While more than 2/3 of respondents, 59 of 85, expected a 25 foundation factor hike in September, greater than 1/4, 23, noticed the Fed trekking once more by using half a point. That is up from 1/5 of the sample final month. The horrific news for the Fed is that inflation is now to this point above target that it has little preference however to tighten aggressively, stated Ethan Harris, global economist at Bank of America NYSE, BAC, Securities. The median of 43 responses to an extra question showed a 50% opportunity of a 50 foundation point hike in September. The median chance for a similar move in November and December changed into 30% and 25%, respectively. Nearly 60% respondents to a further query, 24 of 41, said the Fed could pause raising costs in both the primary or second sector of subsequent year. 9 said the second one-half of or past, while the relaxation stated sometime this year. Still, analysts noticed the Fed finances fee breaching the envisioned 2.4% neutral degree with the aid of year-end to 2.502, 75%, slightly underneath marketplace expectancies of 2.75%, 3.00%. The ballot expects it to attain a terminal stage of 3.00 pages C 3.25% or better by using END Q2 2023, 3 months in advance than a poll taken only some weeks ago. That might be as a minimum 75 basis factors above the impartial charge and above the 2.25 pages C 2.50% top inside the closing cycle. Rate hike expectancies knocked the U.S. stock market in short into endure territory closing month and the U.S. 10-year Treasury yield to change above 3% for the primary time in 3 years. They have also stored a live recession risks. The survey confirmed a constant median 40% opportunity of a U.S. recession over the next years, with a 25% danger of that going on within the coming year. Economic increase became forecast at 2.6% and a couple of 0.0% for 2022 and 2023, respectively, a minor downgrade from closing month's survey. However, price pressures had been anticipated to persist as supply chain disruptions maintained to push up expenses globally. Consumer Price Index (CPI) inflation became forecast to average 7.4% this 12 months and stay above the Fed's 2% goal until 2024 at least. Despite the one's concerns, the U.S. hard work marketplace, which the Fed additionally objectives, showed little signs of worsening each time soon. The jobless charge became expected to average on the current degree of 3.6% this 12 months and the subsequent, earlier than mildly picking up to a few 8% in 2024. The backside line is that for now, there's little war among the Fed's two mandates. But the Fed's task ought to get lots greater difficult next year if inflation remains sticky high, and the unemployment rate rises above 4%, added Bofas Harris.